reward. Okay, so from my perspective, when you make an investment on a risk-adjusted reward basis, you pay for reward. So you will pay 1 unit, and this is actually a very token, doubles as my business card. You pay 1 unit of risk for, or X units of risk for Y units of reward. A profitable deal, 1 unit of risk gives you 2 units of reward. That is a 100% return. 2 minus 1 equals 1. A lot of people will pay 2 units of risk, and if they get 2 units of reward, they think that they had a 200% return. Economically, you broke even. Worse yet, you pay 2 units of risk for 1 unit of reward, you've lost money. Risk-adjusted reward. Using that metric, you can value anything in the world, whether it's cryptocurrencies, digital assets, real estate, bonds, stocks, cars, the value of your day tomorrow night. Okay? So, how do we go about doing this? As a fintech company, we have an advisor, we have a financial advisor, we have a whole staff of researchers and analysts, business acquisition. We come up with ideas, we value the ideas, we veritize the ideas. Veritaseum is the name of the company. We tokenize it. So it's just like securitizing something, except not necessarily always a security. So we could take this building and we could create tokens out of it. These tokens could represent the air rights above the building. They could represent the leasehold. They could represent the 1 year, 2 year, 5 year, 10 year, 15 year cash flows from the leases. We can mix and match these tokens geographically with buildings in Vermont, Shanghai, Bermuda. We could do the same thing with any other asset, okay? Now, as a high net worth investor or the family office, we go and give you a custom risk-adjusted reward profile. So suppose you're interested in diversified real estate, you're interested in capital gains, okay? We actually take the title, you could tokenize that. You're interested in high net income, okay? But you want your income because you're a little bearish on the macro environment. You want it to be short duration income. So now we take a building, we tokenize 3 months, 6 months, and 1 year cash flows. Okay, mix and match, custom delivered to you. That's in a nutshell what we give. So I'm going to give you approximate returns. Okay, the 10-year return on S&P, roughly about 9.1%. The 5-year 10-year return on early stage venture capital, roughly about 10.5%, 11%. 10-year return on gold should be roughly about stable, a little higher in US dollars. We take all these assets and attributes, tokenize each one of them, and give you the ability to have access to it, or we can mix and match them. Now, many would ask, one of my compatriots asked earlier, so why should anybody just go to a brokerage firm or a private equity firm? Well, when we tokenize something, okay, let's see. I'm going to experiment on Rick. When we tokenize something, we put the token is like a glass or a cup or a container. We put the asset in the container, and now that asset can ride along the blockchain, right? We tokenize it as a bearer asset. And now as a bearer asset, it is yours. Catch Rick. So we tokenize 40 kilos of gold, and Rick just lost it because his. That's why sometimes you have to pay other people to custody the asset. Okay? We tokenize the 10-year cash flows from this building. Excuse me, my lady. Okay, and then we tokenize the private equity from the operating company for this building. My friend.
Everybody's better than me.
Now, these assets we've tokenized, whether it's cash flows, capital gains, actual ownership, and look, everybody's looking at these tokens. What's unique about these tokens relative to a private equity firm? Quick test. They're bearer assets. You have it. It's yours. There is no 3-year, 5-year, 10-year lockup. It's yours. Right now, if you decide to give it back to me because I'm just a handsome devil, you may. Okay.
Should I throw it back?
You can throw it back. If you decide to sell it, pledge it, put a lien against it, etc., it's yours to deal with. Notwithstanding regulatory restraints, lockups in the U.S., etc. Okay. Mandatory lockups from a regulatory perspective. Lockups in private equity funds and venture capital funds, etc., or part of the investment trust. Okay, that lack of liquidity puts automatic premium on these because there's a premium attached to liquidity and there's a discount attached to a lack of liquidity. primary difference, number one. The fact that it is bearer means that you have a venture capital fund, you have a private equity fund. Let's take the Morgan Stanley MSREF 8 fund, okay? That particular fund not only has a lockup, but the compensation for that fund is bonus-based. So at the end of the year, end of 2 years, end of 3 years, in order for them to get actual cash compensation versus an accounting compensation, mark to market, they have to liquidate an asset. In order to liquidate the asset, they liquidate it according to their interest, which does not necessarily correlate to what's best to the long-term holders of the fund. So they can sell a building or sell a property, but they sell that property, right, to create cash, and that cash may or may not correlate with bonus time, 1, 2, 3 years out. You can rely on us not having that conflict of interest because we're just a facilitator. We're the technology underneath, we're the advisors from a financial perspective. Okay, we get paid on the transaction, not necessarily as a general partner would. Okay, so I just want to give a quick synopsis of what we do. Basically, we sell risk and reward, or risk-adjusted reward, and we custom manufacture it according to the whims of the client, the purchaser, the consumer of risk, or the producer of risk, which would be the seller. Okay, we have a diverse management team. There's myself, I'm a maverick, I was a self-directed entrepreneurial investor. I'm a tech buff, and I study as a junior student macro trends around the world. I like to see the way things work. We have compliance and AML KYC compliance officer, ex-vice president of Societe Generale for Financial Crimes. We have ex-McKinsey, ex-Goldman. We have almost ex-everything. They'll all introduce themselves as they come on board. We had business acquisitions from Angelo Gordon, a very big fixed income hedge fund. He had a family illness, he had to leave town. Then we have business development, technology, etc., who couldn't make it here. So I want to step down and let everybody else introduce themselves and what they do in the company in particular. And then I'll come back up to wrap it up with actual products that we'll give demonstrations on. Okay, all of our products are basically blockchain software, peer-to-peer capital markets. So the conventional legacy capital markets are concentric circles. You have a central bank, and in the US, our central bank is privately held and controlled, very different from many others. It's truly not a governmental entity. Your money center banks around it, then you have exchanges, you have national banks, regional banks, high net worth individuals, family offices, mom and pop entities, etc. And every time money goes through a round trip to the center and back, each and every one of those circles takes a small piece. We create peer-to-peer capital markets with our software, which connects everybody. Think of a bunch of dots and nodes, and all those dots are connected directly with the line. More transparency, more safety, and much cheaper. Okay? Who wants to go next? Okay, so everybody step back, which made it look like Jeff volunteered to step forward. So.
Good afternoon. My name is Jeff Tabak. I have a very traditional background in finance. I started a firm in 1982 called Miller Tabak. We were credited with the first firm to do program trading on Wall Street. We did it then with index cards. There were no computers. The margins were absolutely enormous, and it was quite exciting business. I also have a very traditional educational background. I did my undergraduate work at Brown and my graduate work at Harvard. As Miller Tabak continued to grow, we switched the emphasis out of the program business into the derivative business. It's quite interesting. Listed options only started in 1974. So when Miller Tabak got into the business, listed options were only 10 or 15 years old and were really not very liquid. Puts did not start trading in real quantity until about the mid-'80s. After the stock market crashed in 1987, I was appointed to President Reagan's task force on market mechanisms. It was a very, very exciting project. There were probably 20 of us from all the leading firms on Wall Street. Senator Brady, or Treasury Secretary Brady, who was not the brightest guy in America. We used to write on his hand what's a put and what's a call, but the report to the president was quite good, if I do say so myself, and really underlined what the causes of the crash were in the 80s. Subsequent to that, as I said, Miller Tabak really expanded its derivative business. Our basic customers are essentially the large household name hedge funds throughout the world, family offices, and some traditional plain vanilla mutual fund complexes, but it's mostly the hedge fund business. Excuse me. And what we do is try to derive strategies to enhance their rates of return. Either they want greater protection, they want more exposure, and they want to do it as cheaply as possible using the correct instruments, and that's what we're very good at doing. You might ask what a baby boomer like me is now getting involved in digital assets and cryptos for. I think the world is changing very dramatically and very rapidly. I think the old way of doing business on Wall Street is dying. Despite what's gone on in the equity markets for the last week or so, volatility has declined dramatically, particularly in the equity markets. The crudest measure of volatility is the VIX index. In the 2008-2012 period, the VIX was averaging in the 20s, traded as high as 40. A VIX of 40, by the way, means a move of approximately 2.5% daily moves in the S&P. It was wonderland for me just dealing with derivatives. In any case, volatility has declined considerably. The volatility in the last 2 or 3 years has been in the mid-teens to low teens. It's changed the nature of the business throughout Wall Street. There are probably 30, 40, 50 brokerage firms in New York City with names that have gone out of business because of the change in the volatility. And I think the blockchain crypto area is a sea change for the business. I think Veritaseum will be a true leader in this area. I think we're going to have the most innovative products. We do have a coin already, and I think the coin will develop intense liquidity, and we're going to try to have deep markets in that coin. And hopefully we'll have a management team inferior to none. We already have a research product. The research product will back up the investments we're offering to individuals and high net worth individuals, and institutions. We plan to write macro research when it's called for. If we feel there's a trend change in equity, fixed income, or commodities, we plan to publish that on our website quite regularly. We are very advanced on the regulatory front. Quite frankly, I think the regulators abroad are much more advanced than the regulators domestically, and Veritaseum hopes to establish beachheads shortly in Bermuda, Gibraltar, Switzerland, Africa, and sub-Saharan Africa. We're particularly excited about infrastructure deals in sub-Saharan Africa, where essentially nothing has been done. In the United States, I think that there are 3 or 4 areas ripe for tokenization, where they essentially still living in a paper world, and that would be trade finance, litigation finance, factoring, and industrial real estate. So I think we've got a very exciting company and lots of interesting things to do ahead of us. Thank you.
Okay. Next up.
Okay, bonjour.
Bonjour, mademoiselle.
Je m'appelle Marilyn Cholo, and I am the AML compliance officer at Veritaseum. And I really love my job. It allows me to wear so many hats, and to build something from scratch, it's just really, really sexy to me. So my background, after serving in the US military for 8 years, it was time for me to grow up. And so I went back to school, went to Columbia University and completed a degree in undergrad in economics, and worked for Goldman for about 14 years. In the process, I went back and completed an MBA also at Columbia Business School. Wish I met some alumni today. So as many of you know, money laundering is a process where gains that were sort of gotten illegally is in the process of being washed. And there are 3 phases where that happened. There's a phase called the placement phase, and this is where the money has to enter either a bank or an fintech company. It has to get into a wallet, for example. Then there is a layering phase where the person that's trying to launder the money is trying to shift the money around so it can't be tracked. So it could go from wallet to wallet, for example, or checking account to trading platform. And then it has to integrate into the system. So because of that, it is a requirement to have an AML compliance program. An effective AML compliance program must have 4 pillars. It must have an auditing component, which Reggie is working on establishing that for us. It must have training for the employees, which we have policies where we will conduct annual training for our employees to make sure that they understand the risk involved with money laundering. It needs to have a compliance officer, and hopefully I will continue to do a good job. And then lastly, it must have internal controls. So we just built a very robust internal control. It's our KYC, we call it VE KYC. And it also has a customer management oversight process where we evaluate when a customer comes through our platform. It's very, very, oh, there, voila, okay. It's really very impressive. So when an individual customer comes into our platform, and this could be either individuals or it could be an entity, it could be government, banks, hedge fund, etc. You would click on the Get Started in order to initiate the KYC process. And so this is sort of joined to a MetaMask wallet. And that wallet is really what we are doing the KYC process on. And what's impressive about it is that the data, everything we capture about our clients is encrypted. It's a much more robust process than what we have in the real world today. And so Reggie's right now is onboarding as an entity. So as he fulfills this information with the regulatory standards, so for example, we're focusing right now on Bermuda. And so we work very closely with the guidelines that are provided by Bermuda. And so we must meet their standard on the information that they need to see. And also the system allows us to upload information. So it will give us the opportunity to upload the tax ID information, charter information. We have built in the sanctioned countries within the system, so anyone that's a sanctioned country will not be able to onboard. And here is where the identity of the company and all the proper documentations are uploaded. If there are board members or beneficial owners, we also can capture that information, especially if it's a high-risk customer. Here, the system makes sure that you're not a robot. This is a traditional method of onboarding. Click previous. And then you go to the next. And you just continue to onboard the proper information. Once all of the required information are onboarded, the team has built another module for an administrator, someone like myself, where I would now go in and this order would be pending. And when I open the order, I would be able to do evaluation on all of the documents that's been uploaded. So what we've done is we partner with a third party that has provided us a KYC database with 35,000 back-end databases where we can check for politically exposed person, folks that are on the SDN list, the sanctions list, high-risk countries, pictures, negative news on an individual, etc. So we can then take that information, and when it's time for me to either approve or reject the individual, I can store the information that I found right into the system. So it's a set.
I just wanna, I was blocked. I explained how I was blocked and why it was being requested.
Okay. So in order for the administrator to validate a customer, the administrator also has to go through KYC. And so my wallet had to be KYC. And every time I go through an authorization process, I must sign in. So we have a very detailed audit trail with all the activities. And even when a customer, so let's say Rick, for example, requested a KYC process, he too has to sign in after he submit all of his information for privacy issue. He has to authorize that we can now go and validate his data. So there's a lot of layers of entitlement and controls that are built in place where not anyone in the firm can do the administrative role.
Now, just wanted to add, this was custom built by our tech team. And so everything is blockchain based. The authorization is done through the blockchain using public and private keys. The security is done through the blockchain. I came in as an administrator. It's asking me to authorize. When I click authorize, it pulls up my wallet and it tells me to sign the transaction with my private key, which is in the wallet. I click sign, it goes out to the blockchain and it's being signed. Everything is blockchain based. Everything. Notice I didn't type a password in. Okay, after I clicked, it's giving me an error, authentication failed, try again. Because my private key doesn't have the role for KYC administrator.
So we have a role management system where delegation is tracked, and that's more of a Sarbanes-Oxley. I don't know if you guys are familiar with operational standards. So yeah, it's very exciting to be part of this. So we've sort of completed the first phase of the process. What Reggie didn't show you guys is when I go in to validate the customer, we take a risk-based approach. So we have low-risk customers, medium customers, high-risk customers. The next phase of our development, we're looking to automate the low-risk customers, where we're going to take an API from the third-party vendor, the KYC vendor, where we're going to be able to, based on the information that's uploaded, the system should automate the process to either approve or reject low-risk clients. And if it's a medium or high-risk client, it gets triggered and escalated to someone like myself or whoever Reggie designate. So it's very exciting stuff that we're doing. And yeah, I'll be around if you guys have any questions.
Can I ask a quick question?
Sure.
How much, once somebody signs on as an individual or a corporation, you go and get all that data, and then you fetch the outside vendor data, and you review it. How much of it's subjective? In other words, you're
Very
looking
good
at this
question. Arthur, you're the man. That's a very good question. And I think Jeff had that question the other day too. So, given my background, what I've been trained to look at, geography, how much money is involved, the type of business, if it's a cash business, like a car wash business or a strip club or something like that. There are some guidelines that are provided to us that are certified, and I would escalate to Reggie or Jeff and say, I think this should be a high risk customer. So for things that look very challenging, because we have the option to do business with who we should do business with, giving the risk, because Reggie may not want to spend as much money for a very high risk customer, so it depends on the return. But there are customers where we clearly cannot do business with. So when it starts to hit that area, then I will escalate to. But yes, to your point, some of it is subjective, some of it is very clear guidance from the regulators.
So
Oh, I'm sorry. I worked for Prudential for 16 years, and 3 of the years I was out of the country, restructuring the vestiges of Prudential securities in Europe and Asia. And one of the things I had was a bank in Geneva. I'm a registered principal, I have to do that too. But every day I was on the phone with the man who ran the bank, because people would walk in to the bank and wanted to deposit money.
Duffel bags.
And yeah, and Jack would call me and he would say, I don't know where this is coming from. And a couple times,
Yeah,
the regulator came
right.
and said, you gotta get this money out of here because this is not
Yeah.
clean money. And it was very hard this was back in 2003 to 2006, there was very little way to check on the derivation of the funds.
But isn't that the way they made all their money?
Not us.
Swiss banks didn't give you,
No,
Swiss banks, the rate of return that they gave you in
The
equities and fixed income
CEO
was
of
horrible.
Prudential said to me, you better not have any problems.
No, but I'm saying before you,
know?
that was the way they did business, period.
In
Yeah,
Europe,
well,
it's
I
more
think in
prevalent.
Switzerland
Who's
they
your
did,
KYC
but.
vendor right now?
I can share that with you.
Okay.
I have it in my email. I don't know it off the top of my head, but I can
Okay,
share
and are
it.
you gonna register as an exchange in Bermuda?
You keep that open to me, I'll discuss that.
But I just wanted to just piggyback on what you said, which is so important. So yeah, the KYC process with the money coming in to our organization is one control that we have to really manage. The other one is a monitoring control. We're in the process of building that as well, partnering up with a third-party vendor. And that is if we see really dramatic fluctuation from clients, like out of nowhere, this person used to spend 10,000 and now all of a sudden 100,000 came in. We need to demonstrate to the regulators that we have a way of flagging these things. We call them red flags and escalating them.
Yeah.
So there's still some ways to go, but we are moving so quickly, and I'm very impressed with the technology team. I just did not expect that we would move. So coming from a banking background, where
Yeah.
things are so slow, it's very impressive what we're doing at Veritaseum. So I'll be around if you guys have any questions. Thank you.
Okay. Next up. After you get to meet the members of the team that are here, I will come back and answer other questions.
Good afternoon. My name is Eleanor Reed, and I'm the head of operations for Veritaseum. I've been with the company since the beginning of January, or the end of January, and my role as it pertains to this conversation, it covers a broad swath of things, but my focus really has been on helping us to identify and to then set ourselves up in various jurisdictions around the world. So that includes Bermuda, that includes the different countries in Africa, Uganda, Nigeria. We're also talking to several other countries there as well. And so that's been my focus, and also to help identify and bring on board the right human resources to help us fulfill all our different roles as we are building out the company. I also have a strategic component, so work closely with Reggie on talking through some of the various options that we see throughout the world and how we can best take advantage of those types of things. So my background is in engineering, I have a metallurgical engineering and materials science degree from Carnegie Mellon and an MBA from Stanford. As he mentioned, I worked at Goldman Sachs, McKinsey and Company, but more recently, and actually what I really love is working with startups. And I've worked with several startups over the years, private equity funds, real estate private equity for several years before doing some more startup work. And so I really enjoy working with Veritaseum and helping them build the foundation to help us become the entity I really believe we can become in this space.
Okay. Any questions for? Okay. So I'm back. Am I centered in the camera?
Yeah.
Ish?
Yes.
Okay.
You good?
So, taking questions, general questions. So,
I
none?
have a question.
The Bermuda question. I'm
Bermuda
interested in
question.
the Bermuda question.
We've incorporated in Bermuda. Bermuda is actually very stringent. So in order to incorporate, you actually have to pass muster with their financial regulatory agency.
What kind of entity are you registering as?
It's a limited company. We're doing the full gamut. So we're going for everything in exchange, BD, everything. So we're in the process of doing that. We started relatively early. I wouldn't be shocked if you were one of the first, or not the first to come out, but I have absolutely no idea because I don't know who's in the pipeline officially. But we are going full blown to Bermuda. I have to fly down there in about 2 weeks to get some office space. But we have not been granted any licensure as of yet. So there are no assurances, and the same goes for everything. We have incorporated in Nigeria, and I'll be going to Nigeria speaking as a keynote speaker at the Asia Conference, African Securities Exchange Association Conference. I was invited by the CEO of one of the prominent exchanges there, and we're going to set up a full Veritaseum training floor, and we are setting up an office in Lagos, which is the financial center of Nigeria. The Nigeria Stock Exchange is the second largest exchange on the continent. Nigeria is the largest economy on the continent. We have incorporated in Uganda, and we actually have a soft operations launch in Uganda, with a hard launch coming next month sometime or a month after. But technically, you can buy and sell our products in Uganda right now. We have men on the ground. A man on the ground. We're expanding. It takes a little time to find talent. But that guy's been working with us for several months. He knows the products very well. His name is Abubakar Manyanya. He's, if you go to the team page, he's on the team. We are also looking to have operations in Switzerland and Gibraltar. Okay, and as of yet, the only place where I don't have a shadow of footprint ready to go down is in Asia. And I've been looking in Asia. And I have 2 Asia reps all fluent in Hindi and Mandarin, and we're looking. So what we're really looking for is talent. Okay, so anybody,
I can give you some names. I ran offices in Hong Kong, Singapore, and Taipei.
please
That'd
do.
be great.
Please do.
All right.
It's very hard to find good work these days, but this is an exciting company. And I'll go over some of the products we have, if you have no other questions. But if we do, please ask.
Well, I have an A and B. What about Estonia and Liechtenstein?
They will be covered in part by Bermuda, which has, in my opinion, Estonia and Liechtenstein. Estonia is one of the first with legislation, but Bermuda has a lot of infrastructure already there. There's a lot of talent, or some talent there, and they have a very, very high standing in terms of global finance. This is the largest reinsurance capital of the world, with offshore and captive reinsurance. There's also Zurich, Switzerland, which of course you're very familiar with. We all know the same guys. So doing two centers in the EU would be overkill, and potentially, depending on how things roll out, even doing one. Bermuda is sort of the Switzerland of global
Are you
finance.
using MME in Zurich?
Well, I don't think I should say that in video, but
Okay.
we all know the same guys.
Okay.
Okay. I'm sure we'll discuss it.
No,
offline.
no,
I'm
no.
recording it, so.
We'll talk offline.
Okay.
Yeah.
Other questions?
On the AML KYC, the vendor, and it may not just be the vendor part of it, but how much do you see yourself going back and doing a check every other month to see if the fact pattern or somebody ends up on a list? Is that something that you do it once and then maybe another 6 months, or is it when you just see some inordinate activity?
What the regulators like to see is a policy or a procedure of how you handle based on the risk level. So, Société Générale, which is the bank that I came from, for low risk clients, every 3 years we have to review them. We would have to put them through the database again. We could do sampling. So let's say we have 100, we could probably do 25. Just sample, just make sure that they're passing the test. For medium risk and high risk, we would need to decide, but for high risk customers, must be done annually. The regulators want to see that type of,
Yeah, makes sense.
yeah. So the high risk is not just as simple as the low risk. There's really a lot involved. So that's where right now we're trying to build the workflow for that and how we're going to incorporate that. Maybe add a flag into the system where I would get a dump of, these 5 clients, their 1 year, this is their 1 year anniversary. Something would need to trigger, and reporting is another thing that we're building, exception reports, reporting for the regulators. So there's still a lot of work to be done, but yeah, these are the things we're thinking about.
And to give you a more holistic view of the company, we're a startup. I've been at this for a while, okay, but this Veritaseum LLC is a startup. We did a coin launch last April, May, and not to discuss price action with the token, but we have 6 products ongoing. Great that you bought it, right? We have 6 products out fully functional, okay? Latter stages of beta. Some of the products are being called beta in name only, simply because from a regulation jurisdictional perspective, they're not a go here. So Jeffrey is coming on as co-CEO of Veritaseum Securities, which will be a full-blown onshore U.S. broker-dealer, okay? And our licensure is going to be very, very broad. Think Goldman Sachs on a blockchain without the conflicts of interest that may be prevalent depending on your perspective. Okay, that was PC enough. Okay?
That's, yes.
Okay, we have Veritaseum Nigeria, Pan Africa, which will be full-blown financial services, again on the blockchain. We have some very interesting partners. I don't want to name them, but they're the biggest investment breed, continental, not by country by country. We have family offices that have agreed to JV with us. These family offices are well over $1 billion, okay, with a massive amount of portfolio holdings. We're talking large telecommunications, large banks, medium-sized banks, say $10 billion on a balance sheet, 220 million employees, not employees, customers, subscribers, etc. We are looking to do business with the government. There's a county in Kenya, which we have a signed contract on, as I'm the sole and only advisor on things blockchain related, and we're looking to do deals. Again, we have producers and consumers. The producer of the risk would be the entity. Let's say in Nigeria, right, this is a hypothetical. We create a high-speed monorail that connects Abuja, which is a political capital, think Washington, D.C., with Lagos, which is Wall Street in New York. That is a very long ride, okay, with infrastructure that is mediocre, to say the best, okay? We create an infrastructure project, high-speed monorail. It increases the value of the real estate along that monorail, right? It increases access to human labor, human capital in both cities, okay? And you can transport back and forth, and the infrastructure project itself has value. We go in as pure financial, we facilitate a pure financial investment. Our biggest competitors in a project like that would be who? Who's the single biggest competitor?
Bond issuer,
Who?
someone who would float a bond to finance that, right?
It would be
No.
actually a nation state, China. China goes
Yeah,
in.
they want to steal,
Right.
whatever, yeah.
And they go in, but they go in as strategic investors because they go in with a very, very low interest rate credit line alone.
Yeah.
But the covenants have a mandatory 51% Chinese labor participation, default rights to claim real estate if they default on the loan, special covenants, which,
Play unfair.
nah, I don't want to say, I'm being recorded.
I can say that.
You can say that? Okay, he said that. And you can see throughout nation states in Africa where there are defaults, very, very high value assets have been claimed. So we go in as a pure financial investor, and we bring in family office money, hedge fund money, and they can keep the employment, so they get the increase in employment. The money paid to the employees does not leave the nation, so the multiplier effect is there. Volatility of the currency increases. It's a net gain all the way around. We currently will not have any competitors outside of that particular nation state because most of the Western world has ignored this entire region. We have a product called VE Gold. I'm going to get back to Africa and other presumably undeveloped nations, but we have a product called VE Gold. Can you go to the VE Gold for me? There, it is right there. And the VE Gold product is an example of VE tokenization, where I told you we take the token, and the token, despite what you may hear from other ICOs, is a container. And you put things in a container, and that container now rides throughout the blockchain. So VE Gold, VGLZ1 is a ticker, and it's trading on decentralized exchanges right now. Or VE Gold G1, which is a gram. VE Gold Z1 represents an ounce. 1 ounce of 99.99% pure gold, 24 karat. I'll let you play with it. Please don't drop. This one's actually live. Please, don't do the Rick on me. Ah! You're killing me. You're killing me. Okay. So, VE Gold represents VE Gold represents 1 ounce of gold. Okay. That 1 ounce of gold is backed. It backs this token 100%. You could go right now to the website. You could buy it with US dollars or F, and you have 1 ounce of gold. That token that you get, that USD20 token, represents title to ownership of the gold, held in a vault in the US or Europe. It's insured by Lloyd's of London. It's secured by Brinks, and it's sitting in an LBMA approved vault. You can redeem that at any time by going and clicking this button, redeem. You pass AML KYC on the purchase and the redemption. You put in the address, it's shipped to you. It's just that simple. It is physical gold in digital form on the blockchain. So you purchase a large amount of it. 1 second, you purchase a large amount of it, 100 keys, very difficult to carry around in your pocket. You carry it in your cell phone, shoot it off within minutes. Okay, that gold token doubles as a very, very stable store of value. Not just stable now, stable over the last 2,000, 3,000 some odd years relative to all fiat currencies. Not to get into Keynesian economics and that debate, but the way all developed nations manage the economy is by the inflation and deflation of the monetary supply. So over time, they inflate the monetary supply by printing more currency, which debases the price of the currency, which makes something that doesn't have the same inflationary rate rise relative. Okay? This gold token will be used as a Pan-African economic token to unite all 54 countries in Africa. Africa has 1.3 billion, 1.278 billion citizens right now, people. Why is that significant? Well, if you look at the recent entrance into the WTO, the World Trade Organization, the Asian countries, you had Japan, which had a strong burgeoning economy. Once they entered the WTO, you had, the Sonys and the Mitsubishis and the Toyotas, taking over the world, their portion of the world. You had South Korea come in, again, with a very interesting burgeoning economy, and they did very well with the Samsungs and the LGs, and their economies lifted significantly. But they did not have something that China did have, and China didn't have as strong as economy as those two. They had 300, 500 million people on the islands. China had 1.1 billion when they came into WTO. 1.1 billion workers looking for work makes a significant economic force. China became the self-proclaimed manufacturer to the world at 1.1 billion, with a slower or relatively more sluggish economy. You have Africa united at 1.3 billion, then you have a significant economic force. Now the big difference is Africa's 54 nations, okay? China was one, okay? Japan was one, South Korea is one. So you unite them from the back end economically with a single token. Think of the US dollar, United States of America, right? The standing success story of a united federation economically. Or you have the euro, which I'm very bearish on. I think it's a failed experiment where you try to unite 17 nations. But those 17 nations had 17 different languages, cultures, economies, central banks, legal systems, and it doesn't work, which is why you have consistent, continuous defaults in Greece, Portugal. You have the Italian problem. Look at any prominent Italian bank's balance sheet, it reads like a horror story. You have Spain, you have Ireland. And the problem was you tried to create a unified economic system with 17 pieces of significant diversity. Use the blockchain, use smart contracts, you can have a token that benefits and unites all 54 countries. But the story doesn't stop there, because these 1.3 billion workers united by that common economic token are sitting on something that's unique. What are they sitting on?
Natural resources.
National resources. The largest store of natural resources in the world. The second largest store will probably be North America, which is a very distant second. Most of the gold, much of the oil, if not all of the oil, comes from continental Africa. Just think sub-Saharan Africa by cutting out North Africa, and the story is almost still the same. Uranium, bauxite, alum, copper, silver, there's a lot of it. So the reason why we are looking to partner with exchanges and with family offices is we take their holdings, we tokenize those holdings, we create liquidity, we get a liquidity premium, we leave the control right there on the continent. Think about the COMEX in Lagos, New York Stock Exchange in Lagos. All trading with a bearer asset, right? Fees phenomenally low, transparency phenomenally high. You're talking a sea change geopolitically and socioeconomically. A very big difference the way things are done. So this company has very, very high aspirations up to the top. Now, let me get everybody's questions. And
Yeah.
once you're finished with the gold, please give it back. Okay.
So look, what I'm getting, Reggie, is that what you've done since we last spoke is create a platform for essentially STOs on top of Veritaseum that would, not only can you function as an exchange, but you can also function as an issuer,
Right.
right?
Goldman Sachs on the blockchain.
Right.
Think about Goldman Sachs as an issuer, as an ATS, as an underwriter, as a broker
So if I
dealer.
bring you a client, let's say, okay, we're gonna do your STO, it's gonna be underwritten by Veritaseum tokens, whether you're, ERC, 20 or 721, whatever it happens to be.
Right.
Right? Whatever you happen to use, you could actually launch, not an ICO, an STO, fully compliant out of the box.
Fully compliant. One of our potential partners in a continent that's not this one is one of the largest exchanges in their area of the world. And we're looking to partner with them both on a central basis and on a peer-to-peer decentralized
Okay,
basis.
so we need to talk about some stuff.
Okay, if you go to the research session, well, before we go to the research, so if you take a look here, We've tokenized gold, and this is available, everything's available now, tells you what the inventory is. Go to the website, you use your cell phone, go to the website, simply buy it. Okay, now that you buy it, gold, palladium, silver, ounces, keys, grams. We're gonna add tokenized real estate, private equity. You know, now that the framework is done, it's just a matter of financial engineering and math. You should drop one in one at a time. You can buy it, you can redeem it, which you sell it back to us and we give you the physical, or you can sell it. You sell it back to us and take a spread. Okay, and these are all your C20, so they trade on exchanges as well.
It's a bid and ask.
It's a bid and ask if you sell to us. A redeem is simply getting physical delivery. Okay.
Is the secondary market in, like if I held the first thing and I wanted to sell it, I could redeem it to you, or I could sell it on the secondary market and you provide the conduit for that?
We don't provide, well, we will buy it back at a discount, right, but it's not guaranteed, so far we will. And the secondary market is, we don't control the secondary market right now. But if you type in the ticker symbol, you would find markets in Ether Delta, Fort Delta, there are a couple of centralized exchanges that have it.
So it's really not a secondary market. If it's on an exchange and you wanna buy it, you just buy it.
Well, you can, but here, what makes this interesting, this is the world's only real stable token. One of our African employees at the African arm, one of our potential competitors came in and said that they're going to create a stable token backed by US dollars. They've got regulatory approval, et cetera. But the African employee said, how can anybody consider a US dollar backed token stable? Right? It's not stable. Trump gets in office. Trump weaponizes the dollar to use it as a weapon for any of the other nations that don't walk lockstep in his geopolitical, direction. So he drives the price of the dollar up, which makes the cost of debt service on US denominated debt very expensive. China feels the pressure. And not just China, Turkish banks, basically anybody with significant US denominated debt. Now, that's what presidents and countries do. You have the reserve currency, you have the biggest gun, you point it at people. That's the whole purpose of having a big gun. But that also does not make the US dollar stable. You feel stability in the US, the rest of the world is significantly more, it's instability. Gold is stable against fiat currencies in general. Okay? Now, here we have a stable token, and that stable token can be sold. This token is legally titled to gold, so we sidestep a lot of regulatory issues. And with our rock solid AML KYC component built in, we can compete directly against Coinbase. Right? You purchase this AML KYC, we're going to automate low risk stuff. Imagine going to Coinbase, getting approved and getting an account within 4 minutes. And then getting a token that is stable, very stable relative to Bitcoin, even the US dollar. And that's just the beginning. If you go to the front page to the beta, the first one.
Because it's hard asset backed as opposed to backed by currency that is essentially volatile.
Well, it's hard asset backed by a stable commodity, gold, and we can't control what secondary market participants do. All ERC20 tokens, all tokens, Bitcoin and F goes down, the entire market sinks with it. The price of gold, the spot price of gold is still $12.40 an ounce. So let's suppose Ethereum and Bitcoin drop 50%, everything drops in sympathy, including the VE gold token. What would you, as an exponential securities principal, do with all of your financial expertise?
I'm not sure what I would
What would
do.
you do,
I'd go
Rick?
with the
Buy a
gold.
bunch more.
I was on the phone, I'm sorry.
I'd buy everything available
Yeah.
and then redeem it. And I get the price of spot gold. Buying gold
Right.
50 cents on a dollar to get the gold at full price is nirvana.
Do you think it'll behave that way though?
It's guaranteed. The gold behaves as the gold behaves. The
No.
price.
Do you think that if Bitcoin and Ethereum drop, so all roads will sink? Even though it's backed by gold, do you believe that it'll also get dragged
This is only a
down by
transport
that?
mechanism. This is not a pricing mechanism, it's a transport mechanism, so it doesn't matter what happens to Bitcoin or Ethereum.
Well, it's not entirely a bad thing
It's a
that it
rail.
doesn't move down, it's just a buying opportunity if it does, right?
Well, put it this way. It shouldn't move down as long as you have rational participants in the market.
Right.
You don't. If the price of gold that I sold somebody drops 50%, I personally buy it back.
Yeah.
There's nothing better than buying $1 for 50 cents. And I could do that all day. If I do it long enough, I could drop the rest of the business and just take advantage of everybody who can't count.
Yeah.
But as I buy the tokens, what happens to natural pricing pressure? When you buy things, price goes up.
Yeah.
And it's going to go up until it hits equilibrium, right about spot price minus expenses. Okay, so natural market arbitrage will keep the price stable. And that's how you guarantee a stable token. Greed. Okay, mathematical algorithms and all these other newfangled, and I'm a tech guy, I like tech, but there's reality and then there's other stuff. Market greed will always stabilize the token. If anything, I gladly buy. If I can sell you something for $1 and then buy it back for 50 cents and resell it for $1, that's literally a business model. But that business model never lasts because the arbitrage closes opportunity quickly. Okay, same thing, the price shoots up too high, right? People simply sell the token for gold. Sell the gold for the token, that drops the price back to the equilibrium. Okay, there should be a slight premium to spot because this gives you free storage, free security, and free transportation via the blockchain. So gold is a decaying asset. There's no yield to it. So because of the price of storage and insurance, you actually have to pay for the storage. Right. Now, gold used to be a decaying asset and no yield, but now we have yields because now we're creating, because this rights to a smart contract, we have other products that we can use the VE Gold for as a denominating asset. I don't want to call it a currency, but it's going to look and act a whole lot like a currency. So we're creating a hard money loan right now for a developer in Jersey to buy small income producing properties. He's going to get the hard money loan denominated in gold, and it's going to run through our smart contract, which we're building from scratch, which means you'll have a 45-minute closing, possibly 45-second closing. Everything's done by the smart contract, communication with title company, etc. The gold denominated loan will be converted. Output will be converted to US dollars. He can do whatever he wants to it. It will be an OID loan, original issue discount, so he doesn't have to pay interest. So he gets the money. 1 year later, he pays us back 1.10%, 110% of whatever the loan was. Very simple, right? Very good for him in terms of cash flow, and done, denominated 100% in gold. The investors who pledge their gold out or loan their gold out, who are used to losing 55 basis points a year holding gold, now get roughly 850 basis points a year with something that has a 65% LTV collateralization. Very, very safe all the way around.
What do you think that's going to do to gold's relationship with the CFTC?
Well, I'm reticent to discuss anything regulatory, okay? But as this is used, this is private property, right? Being pledged out for use for something else. Okay, so, and it's peer-to-peer, remember.
But you're fundamentally you're adding a different lens to.
I understand 100%. And the reason is because things that are capable before, things that are capable now weren't capable before.
Right.
Regulators, and not just regulators, investors, practitioners don't understand the economics of the blockchain, particularly the business models. Just like when the internet came to fore, a lot of people thought the internet was for pasting pretty pictures on websites and email. But the internet enabled business models that just weren't capable before. Who could have ever predicted a Google or Facebook back in the 80s? Absolutely impossible. Because the trappings and mechanisms to create their business models didn't exist. Right now, people just can't anticipate where we take regular assets and commodities, things that weren't even considered assets and commodities. Once we tokenize intellectual property, once we tokenize something, as Jeff was saying, like financing litigation, right? The trust, viatical trust, the sky's the limit. So one step at a time. And as of right now, you could go in and you can purchase it. Now I'm gonna run through everything else quickly. This is the beta. This is akin to a smart contract driven private equity fund or venture capital fund. We have research, we have 3 full-time analysts, and we have Eleanor and Andrew, who's not here. He had an illness in the family. Andrew came from Andrew Garden, about $23 billion fixed income fund. He was the top producer in the real estate guy, very smart guy. They coordinate with the 3 analysts we have offshore and the analyst manager, who I've been working for a long time. For those who don't know me, if you Google my name, I'm known for predicting the fall of Bear Stearns about 6 months before they pop. Lehman Brothers, Washington Mutual, Countrywide, General Growth Properties, about 86 calls using the same analytical staff. Okay, and we've been working together since 2007, since I started selling real estate and shorting everybody. buying puts actually, not shorting. And we work together very well. That low-cost labor with high-level intellectual capacity, combined with onshore guys who have a lot of experience, allows me to have an analytical machine laser focused on digital assets and the implementation of tokenization for real-world assets. So, open the forensic paper report, scroll down a little bit, click over. Click open. To give you an example of what I mean, this is an entity valuation report. Just scroll down to the end at a medium speed. Okay, this is about 64 pages. This is best of breed once it comes to research on digital assets. Best of breed. I'll gladly compare it to anything. And this is real research. Revenue, cost, margins, addressable market, revenue growth, competitors, valuation methodology, broken down, DCF, growth decay method. Keep going down. And this is real research. Not only is it best of breed in the digital asset space, I actually am willing to challenge anybody to compare it to sell-side research. Take a look at Morgan Stanley and Goldman Sachs or Merrill Lynch report on Facebook, and then compare it to this. Okay, so we do entity research, we do platform research. Entity research would be a company like Veritaseum, PayPal, Populous. Platform research would be infrastructure, Ethereum, Bitcoin, Monero, Dash. We do global macro reports. So if you go back and you look at a macro report, click the very, before we do the macro report, do the gold, the gold, open that. This is a description of the Veritaseum assets products. Okay, let me do asset talk. So this explains how VE Gold works. VE Gold is software, application, and period. But it's software that represents and allows you to control hard assets. In this case, it's gold and silver, but it could be anything. Okay, you can see it's being used on a cell phone. The application is very responsive, meaning it automatically switches from tablet to cell phone to desktop to big screen automatically. And when you buy this, it could be compared to anything. Anything that we tokenize or veritize, we make sure it blows all its competitors out of the water. So differentiating factors for VE Gold is compared to GLD, which is the most liquid gold. I can't call it gold back because I don't believe it's gold back. Gold affiliated vehicle, physical, which is Eric Sprott's physical trust, where he actually physically backed gold and silver trusts with the actual commodity. Actual gold bullion and tether. We compare very favorably to all of them, not in all areas. For instance, we can't match GLD and liquidity, but it's 100% back redeemable on demand. You can redeem 1 gram if you wish. It's expensive to get 1 gram shipped to you. You might charge more in shipping costs than a gram, but you can redeem 1 gram. Everything is bearer. Comparing on price, believe it or not, go take the medium and midterm price. Here's the price right here, based on 10 trillion ounces. You could get insurance, you could get security, you could get storage, you get use of smart contracts and the blockchain, and the price of the actual bullion itself for less than people sell just a bullion for over the web. And this is a price comparison as of the date, right? Go back to the actual app, look at our prices, and do a search on the web. We don't look for a lot of margin. This is basically a vehicle to store value to use our real products, which are the smart contracts, et cetera, et cetera. So this goes through the ins and outs of tokenization. Let's go back to the Veritaseum. Scroll, open the, here we have a deep dive forensic analysis of likely leader of the pan-European banking crisis. Yes, there is gonna be one. I told everybody Italian banks, everybody thought the Italian banks were finished with their malaise and their fall. Not true at all, okay? They never lost their net performing assets, not performing liabilities. They're there, and they're not gonna go anywhere because there's nothing to do with them. All they're doing is they've driven the interest rates down, negative, which made it more palatable over time, but the bad assets are still there. As interest rates rise and the natural interest rate cycle progresses, those non-performing assets are gonna look worse. Cryptocurrencies versus central banks. This is when the BIS, the central banker to the central banks, wrote a negative, open that for me, wrote a negative article, critical article on cryptocurrencies, the industry, in a very subjective way. We responded with objectivity. And we've counted everything they did. If you have a chance, read it. It's illuminating. Especially when you get to see the bias of entities that should be unbiased and how easy it is to counter that bias. Okay, and then go to a couple other projects and now wind it up. Go to the menu.
Menu?
Yes. So where it says my currency, everything in the app can be translated to the currency of your choice. So it doesn't change the currency, just changes the translation. So you want to see everything there in US dollars, Chinese yuan, Japanese yen, Bitcoin, Ethereum, British pounds, euros. You simply click that and choose whichever you want. Close that, let's go down, see what I forgot. Click the menu again. VE rent, the tokens. Our token offering is basically what you use to purchase access to our products and services and to buy the research. If you don't have access to it, you can rent it from somebody else, economic rent, or you can rent yours to another party that needs to get in, right? We have internally an entire facility to buy, to rent or have rented the actual tokens. Go back to the menu.
Do you need to have the token to buy the gold-backed token?
No, you don't. You could buy that in fiat, but if you have the token, you could get a discount. So not only are you cheaper than everybody else, the token gives you a further reduction in price. Exposure. So exposure is now, these were put in a long time ago, and the market corrected like 80%. If you look at how much the market corrected, like this portfolio did about 50% better than the market in general did, okay, over this time period. These are all smart contracts. Click the plus button, let's welcome from the beginning. Okay, you come in, you have your Veritaseum token, you pay interest to get in. Think of it as like an interest fee. You have your capital, you create your own smart contract. Put a number in that I can afford. 0.03 variant. Okay, so you put a 0.03 variant, which buys you $22.05 of exposure based upon the price, the relative price of Ethereum to Ethereum. You put a duration in anywhere from 1 minute to 99 years. Just put a duration in anytime. Okay, you click submit.
It's 5 years. It's gonna be a while.
Okay, it's gonna be a while.
The market's in.
It opens MetaMask. It's gonna pull the contents out of your wallet. You can click confirm. Okay, transaction created. Click the little transaction created box. Everything in this application, everything can be visible in the Blockchain Explorer. The ultimate in transparency. Another difference between this and a typical hedge fund or private equity fund, everything is opaque. Cost, pricing, transactions, everything is done. Go to any Blockchain Explorer, take a look, click a link, you can track all, you can see your funds and what happens throughout the entire life of the contract. So go back, it takes time to confirm, success, that was very quick. Now, your assets are in the Veritaseum, right? The contract is open less than a minute ago, and now it's gonna go out and it's gonna buy that portfolio that the researcher recommended. So if you go back to the front page, the beta show what the portfolio looks like. So it's going to take this portfolio of assets, and it's going to attempt to replicate it according to the research. The research has a lower and upper bound evaluation. The trader, which is the app that goes to purchase it, has rules to prevent front running, illiquidity for large bid-ask spreads, etc. Once it replicates this to the best of its ability, nothing's going to be the exact same. You will have your own mini portfolio. Go back to the exposure. Let's click something at, click the one that doesn't have some time to play. 54,348. Okay. Okay, so now you see the return, exposed value US dollars, progress in terms of time of the contract. This is a smart contract that you created. You don't need to know solidity. You simply fill in the contract terms. Okay, click the performance graph. Okay, this is the contents of the particular portfolio. Okay, click the performance graph, left in the middle. This is the performance of the portfolio. Okay, and one in US dollars and the other one in actual Ethereum. And then click the last icon to the right. And this gives you information on it. Now, at any given time, unlike a venture capital firm or private equity firm or a hedge fund, right, you don't have lockups, click the little 3 stars to the right. Let's suppose, right here. Oh, you can't see that, I'm sorry. And we're gonna close it out. Okay, so let's suppose I just had a divorce. I lost a lot of money in a divorce. And my son's having a bar mitzvah, and I need capital. Okay?
You too?
I decided to close the exposure. Click close exposure. Now this exposure is only 61% in. It still has another 4 or 5 months to go, a year to go, etc. But I just close it and sell it off, right? I could choose a closing strategy. Click wait for F, right? It gives you the attributes. What that does, it tells the system to go out and sell your assets in the market through an exchange. Okay, it takes time. You have to go through and negotiate bid-ask spreads. It acts as a trader for you. Okay, scroll the page up so everybody can see it. That's it, okay? Or you could click asset delivery. Asset delivery is very cool. What that does is instantly transfers the assets from the small contract directly into your personal wallet. That means you don't have a taxable transaction. You still keep your cost basis that was there, whatever it may be, whether it's gain or loss. And what? Catch in the back. Make sure you're paying attention. Ready? Catch. No? Catch. Nobody wants my business card? Okay, Jeff, you're gonna say this. I'll catch that one. Okay. That's asset delivery. He now has full possession and control of the assets on a bearer basis. There's nowhere in the world you could go into a real estate hedge fund or a venture capital firm, right? Go in 6 months out into the contract, or when you're out to the it's not a contract, but you have a GPLP agreement, GPLP agreement, right? And say, not only do I want my money back, but I don't want the money back. I want the actual assets. I want my pro rata portion of the assets that were invested. It can happen, it'll never happen. Easy to do. Click asset delivery. Right? This tells you what assets will be delivered. It gives you a warning, right? The contract cannot be reverted. Click I understand. We have disclaimers and legal stuff all over the place. We're lawyer to the T. Okay? Click continue. Okay? And actually I'm not gonna do it. So it opens the wallet, it tells you to confirm paying transaction fee, shoots the stuff directly to your personal wallet. Close it out.
So is the assets in my portfolio in your wallet as a custodian, or are they in my wallet with you?
It's in a small contract.
So it's not even exposed?
To our balance sheet, not at all. You have no exposure to our balance sheet whatsoever. Okay, the small contract, the only control we have over it is we can destroy it. I don't know how well you know facility programming, but there's a command called destroy, which destroys it. When you destroy it, it takes the contents and returns it back to the public addresses that it came from. So if we were hacked, and somehow someone was able to get control of our private keys, they can destroy the contract, but all that does is return the assets to you. Right? They can't get access to it unless they hack your private key, which is your business and not ours. So you have no balance sheet and credit and counterparty risk exposure to us in that fashion whatsoever. We also will be implementing catastrophic event, fail safes, which allow you to return upon, the IRS decides to cart Maryland off to jail or something like that. Never me, of course. So, very different way of looking at things. Okay, we did assets, we did exposure, we did research. Token management is the back-end administrative portion. It's only available to administrators where we create tokens. We tokenized Bitcoin. We actually took Bitcoin, wrapped it in Ethereum, and put it in the blockchain a year ago. You could tokenize anything. So we tokenized gold. Commodities, we plan to do Nigerian oil, which is interesting because Nigerian oil has about I don't know if it's a 10%, but it's definitely a discount. The reason is, despite the fact that when the